Good morning, it's Friday the 31st of March. This is the Phoenix Blue Update brought to you this morning by Tom Colley. Date quite important today, 31st of March. Not only is it the end of the month, it is also the last day of the quarter. That means the markets are liable to be unpredictable as positions by institutions, banks, etc. are closed in order to produce quarter end and month end figures. Potentially trade at a reduced risk, avoid trading this afternoon, and take care when you are trading. Okay, guys. Well, news overnight. Donald Trump hasn't given up on his healthcare policies or his healthcare bill yet. He's trying to persuade key Republicans to come on side with this so that he can go back and represent the bill with a view to getting that in place. So really doing what it says on the tin with Trump. He is a fighter. He doesn't give up. And we have seen a bit of a bullish dollar throughout this week, although I believe that's been driven predominantly by euro weakness, but we'll have a look at that in a moment. Let's start over with the news. Okay, yesterday we had some good numbers out on the final gross domestic product. There's quarter-on-quarter figures for the US, forecast at 2%, came in at 2.1. What's interesting about here, and what you can see here, is the history of this. This is obviously a quarterly figure, and that's the 7th quarter on the run that it's exceeded its forecast. So right through going back to September 2015, we have seen the gross domestic product outperforming the forecast. So some positive numbers there, which may have been partly the reason for some dollar strength there. Unemployment claims came in slightly disappointing there, but this is the weekly figure. It doesn't have a huge significance on the markets unless there's a huge variation. We have non-farm payroll next week, which is way more important, and obviously we'll talk about that next week. Going in today, 9:30, we have current account numbers for the pound, which will be interesting certainly, and then gross domestic product for Canada. Okay, over to the charts then. Starting with the dollar index, and I put on the weekly chart today. Although we shouldn't really be looking at this week's weekly bar until the close this evening, because the bar hasn't finished. I just wanted to show you how much of a bullish engulfing bar we so far this week produced on the dollar index. Now, as I mentioned briefly earlier, this is predominantly or potentially due to euro weakness rather than outright dollar strength. Bear in mind that 58% of the constituents of the dollar index are the euro, so there's a big weighting towards it. If we go over to the yen, we will see that although we've had a bullish week, we certainly haven't taken out last week's bar. This obviously being a daily chart again now, we obviously haven't taken out last week's bar or last week's highs in the way that we have there on the dollar index. So I am looking at a level at about 112.80, which basically constitutes that. So if we can get above that level, we will be have an outright US dollar strength. But at this moment in time, as I say, I think really what we're looking at is euro weakness. Here's the euro chart. You can see we had a big move yesterday. We've had, to be fair, 3 continuous bearish days and a big move down here. We closed right into the close overnight, or we were bearish right into the close. And when this screen was grabbed, we'd also looked like we were rejecting an intraday level on the way down further. Key level here, 106.50, and then clearly this upward trend line through here. If we break that, then we really do have weakness in the euro. Why do we have that? Really a number of factors. Yesterday on secondary yellow flag news, we had very disappointing consumer inflation figures from both Germany and Spain, who obviously are big countries in terms of the euro economy. The influence and outlook on Brexit is certainly a degree of uncertainty there. Adding to that the French election and the coming German election later in the year, and certainly uncertainty rules. So that could be the reason behind that. So I would be looking potentially for intraday opportunities to take this further to the downside today, on the basis that we see continuing of that dollar strength and that euro weakness continues to play out. Over on the pound, well, we had a bullish start to the week. We've subsequently had a pull back, and we now appear to be in this range area between this 1.280 and this 1.2525 zone through here. I'll be looking for price to break one way or the other from that to give me any direction on the pound. Obviously, we've got a lot going on with Brexit at the moment. We had Article 50 instigated this week. As I thought, and I think I said on Monday, we didn't see a huge market reaction to that event. It was known. It was a known quantity. It was a known date. The markets had already priced it in. We just had a pullback to this 12380 level through here. I was interested in about 1.2405, I think, and we did have a move to the long side from that level. Where the pound goes next, well, we clearly retested this downward trend line here, which is the top of this triangle formation. We tested it on the upside there, again on the downside there, and then we've retested it on that test of the 1.238 level through there. So will we see more long in this market? Not really sure. There is some uncertainty in there. There's a level here at 126, which is clearly key. There's a key in conjunction with this other downward trend line here. If we get a break above this, I see this level through here at 128.65 being a suitable target on that basis. That would be the case because what we'd be seeing there is an A, B, C, and that would be the D movement of that potential move through there. So we'd see that move from A to B, a pullback from B to C, and then the extension out from C to D being the same length as the first A to B move. If you project that, it's almost spot on to that level through there. Now you might think, well, why am I even considering that, bearing in mind the Brexit scenario, etc., etc.? Well, the reason is, if we take a look at the FTSE, this is the daily on the FTSE 100, we've clearly got a potential head and shoulders formation setting up here. We won't have a head and shoulders until 72.60 is taken out through there being the neckline, but we have got a rising wedge occurring here on what is potentially the right hand shoulder, and I will be looking in terms of trading this market for a close below here, and then to pull back to this 73.50, 73.47 level, targeting the neckline for a T1, and then potentially if the head and shoulders were to play out, we'd be looking at this 7.100 level there. That's the reason that I am considering the long side on the pound. If we get pound strength, we will see the FTSE move to the downside. If we don't get that, then clearly we've got potential for more ranging in here. The head and shoulders won't play out, but because these markets operate inversely, I'm looking at one scenario on this market, and then it's natural just to consider that as a potential on the other market. If both play out, as I've suggested, to the short side on the FTSE and the long side on the pound, I've obviously used the FTSE to get a heads up on that event. Okay, where we've just seen the pound also on the Aussie, we're not seeing the degree of Aussie weakness, pound weakness, or in fact New Zealand weakness that we are seeing in the euro weakness. We're seeing the dollar index reflecting the euro because of its weighting. In a more general context, the dollar isn't as significantly strong as it appears against the euro. So again, here I'm looking at a ranging market. I've had orders resting at the top of this range here all week, and also the bottom of this range here. Again, the whole week. That was part of my weekly analysis. Clearly, price hasn't come back to either of those levels this week. There's an interesting level through here now in conjunction with this trend line that we've had 4 touches through there. If we see a break to the downside and a retest of that 7590 area there, then I would look to trade this market on a short-term basis down to the bottom before looking for the bottom of this range to take it back to the potential to the high side on a long trade. Okay guys, so as I've said, it's month end. There are some opportunities on the charts, but be aware that any opportunity, because of it being month end and quarter end, is less probable than it would be on a normal trading day. Okay, just a reminder, Tuesday the 18th of April, free trading session with the Phoenix Blue Fund Managers in London. If you're interested, go to the website, go to the contacts page and leave us a message about that you're interested, and we'll send you the appropriate joining details and those sort of things. Any other questions, again, go through the contacts page on the website. If you like these videos and you aren't already subscribed, there'll be an option appearing on your screen in a second where you can click on that, subscribe, so you get an email immediately that the video is available for viewing. Okay guys, thanks for listening. Have a great weekend, and let's have a look forward to the next week where potentially we've got some very nice trades setting up. Thank you and goodbye.